is how professional forex traders use in exiting their trade. When I mean professionals, I mean hedge fund managers, institutes. We have been taught how to enter a trade, but we have not been taught how to exit the trade. That's why in this video, I'm going to be teaching you how to exit your trade as a pro forex trader. Now, I want you to pay close attention to this. Let's say market is going up, right? And let's say the market is creating higher highs and higher lows and is in an uptrend. So let's say you enter the market at this point here. How do you know when to exit this particular market? Let's say you have an entry strategy. How do you know when to exit this particular market? Most persons will tell you, based on market structure, you have to exit at the next resistance level. Now listen, if you want to become profitable as a forex trader and you continue exiting the market like this, you are leaving money on the table, and that is something you do not want to do. You want to try and make the most out of a particular trade and cut your losses short. That's what profitability is all about. Now listen, let's say you have an entry strategy, right? You have an entry strategy and you enter the forex market. Now I'm going to be showing you one tool in this video that you're going to be using to exit the market flawlessly. And listen to me, if you cannot watch a long video, you are not ready to learn as a forex trader, you should probably go and watch some Mr. Beast content. So let me take you to my screen. Alright, so guys, welcome inside of my screen. Now I'm going to be teaching you how to use your Fibonacci extension to exit the market as a pro trader, right? This is how pro traders exit the market. So without wasting much of your time, this is a no BS guide, step-by-step guide on exiting the market. Now, you must understand that before you even exit the market or before you even enter the market, you have to understand trade management. I'm going to be teaching this in my coming video. So you might probably want to subscribe to this YouTube channel so you won't miss those content, right? All right, so you come to your trading view, the place where you see your toolbar, right? Come to this place. This is where you see your Fibonacci, right? You come to this place, you just simply go to your Fibonacci extension. Look for Fibonacci extension. So okay, this the second one is Fibonacci extension, which is this, right? This is Fibonacci extension. So let me just put it here. Now, first off, like I said earlier, like I taught on the board, I said that to use Fib extension to exit the forex market is probably the market is creating highs, lows, higher high, higher low. Do you get? Now the market is moving upward like this. Now, using the knowledge of Elliott wave pattern, that the market will come to this area of resistance, right? To this area of resistance. For those of you that understand what Elliott wave pattern is, to this area of resistance, or those of you that understand ABCD pattern, right? ABCD pattern, it is same thing as Elliott wave pattern, right? And now you must understand that these things, you don't just use it alone in your trading. You use it in combination of other things. It is a part of conferences in trading, right? Now, how do I exit the forex market using this Fibonacci extension? How do I exit the market using Fibonacci extension? Now we have a market like this, and this is our Fib extension. Let's say the market made an impulse retracement. Now to this upside now, right? What we're expecting now is the market comes to this place, to this area again. We are going to enter the market. Let's say the market now finally comes to that descent, to this area now, to this point here. So I want to enter the market at this point. Let's say we enter the market at this point. You already have I believe you already have your entry strategy, or probably if you have not, I'll probably create a video of how I enter the market. So you want to subscribe if you don't want to miss that. Now, if you enter the market at this point, where should you exit the market? Structurally, most traders will tell you to exit the market at the next resistance, right? At the next resistance, which is this level. Structurally, that's in terms of market structure, exit the market at this next resistance. But you must understand that as traders, if you want to become profitable in trading, you do not want to leave money on the table. It is very important. You must understand that you want to make the most out of a particular trade, and you want to try to cut your losses short, right? That is one secret to becoming profitable. So in exiting such market using Fibonacci extension is simply a tool that will help you understand the next 100% move of a particular impulse move. Now what this means is that you see this point here. Let me use my arrow for this. You see this point here. Most times, not 100% out of the times, right? But most times, I want you to do your calculation. After watching this video, just go to the Forex chart. If you are serious about learning this thing, go to the Forex chart, right? From this point to this point, most times is equal to from this point to this point. So from here to here, from this point now to here, if it's 100 pips, from here to here will be around 100 pips. What I mean around 100 pips? 90 pips, 100 pips, 120 pips, like almost equal. While if from here to here is 100 pips, meaning that from here to here will be like 50 pips or 60 pips around. You get it is like a 50% retracement. This retracement or a corrective move. It is like a 50%. While from this point of resistance down to here will be half of this whole retracement. The same thing for this one. From this point to here will be half of this particular retracement. Do you understand? Now you must now understand that to now get this whole move, what Fibonacci extension help you do is that it will help you know like after breaking this resistance, if the market breaks this resistance, the point it will get to before it starts retracing, because that's the point you want to exit your market finally. Like your total exiting point should be around this point where the market will start retracing, right? Now you can use this as a swing trader, you can use this as a day trader, or even as a scalper, right? Now using this Fibonacci extension that I brought, okay, let me bring it again. From this is where you get your Fibonacci extension. You see this point here at your toolbar where I said it is mostly for where the measurements are being found, right? Anything, the Fibonacci, there's the Fibonacci retracement, there's the Fibonacci extension, there's the Fib channel, there's the Fib time zone. So what you are using is the trend-based Fibonacci extension. So you bring your Fibonacci extension, and what you do is that that's for the uptrend. Now you map it from this low, which is when I mean the low, I mean the not the previous low, because like this now, this point is your entry point. So below your entry point, the low below your entry point is this. You map it from here, you drag it to the highest point it got to before it started retracing, and then you take it to your current low. So meaning that your take profit, your 100% take profit should be around, your 100% take profit should be around this point here, which is this point that is showing 1, right? This meaning that this is the point you should exit the Forex market. So let me clone this. This is the point you should exit the Forex market, right? This point here. This point here. So meaning that if you are to enter a trade, let me delete this. So I believe you understand this Fib retracement now. So let me based on that Fib retracement, it means that that's based on the what I told you earlier just now. I said if here is 100, here like this will be 100. So this one now is like the same measurement pip, the same pip measurement. This one particularly is the same pip measurement. That's from here to here. It's the same pip measurement from here to this point. Do you understand? From this low to this high, it will be the same. Most times, the same pip measurement from this low to the high. So you want to exit at this point, like without leaving any this thing on the table, without leaving any pips on the table, right? So now that means if you are to enter this particular trade, let's say this is a buy, right? You are longing this position. To enter this particular trade, let's say around this point here, and your pip stuff here is, let's say around like 100 pips, right? 100 pips stop loss, and your take profit would be somewhere here. You get, which is like 1:6. That's your full take profit. And note, most persons now will not understand or think that they'll just enter the market and the market will just start trailing, you just start going up to this point. That's why you have to understand trade management. There's a point it will get to, because if it gets to this point here, this resistance zone here, there's a point you should get to. You should either take out some profit, which is you managing the trade, or lock in your profit, break even in your trade. Do you understand? Break even your trade, because it might get to this point and then just start retracing, and this point might just be the point it might want to change, like change of trend. Change of trend might just occur at this point here. But most of the times, it is always going to the upside, right? It is always going to the upside. So you see that then most traders, that's how you see pro traders are able to like make out profit from the forex market. Do you understand? I believe what I've taught in this video is very comprehensive and understandable, right? So what I want you to do is that I want you to apply this in your trading. Apply this in probably during your back testing. You want to like try this act. Now, if you're a complete beginner and you want to learn more about trading, right? Use the link in the description to join my free Telegram channel. I post videos like this most of the times on my Telegram channel. And you probably want to get my trade insight, trade signals on, use the link in the description to get those things, right? So what I do on the Telegram channel is not just for trading signals, but to educate traders about the forex market, teaching them risk management, trade management, money management. And now, listen, if you want to learn from me one-on-one, you want me to coach you in forex trading, you want me to guide you in forex trading one-on-one, right? Use the first link in the description to reach out to me, and I'll be glad to help. And if you're a newbie and you probably do not have money to invest in coaching services, like one-on-one coaching services, there's a link in the description that you use to access my 1 month free training, right? It is paid, but I'm giving it out for you for free. Use the link, reach out to me now, and I'll send you the link to access it, right? My name is Trader Chris, and I'll see you in my next video. Bye for now.